Hey, it's Mac with PriceActionTradingSystem.com, and today is Tuesday. It's October 13th. This will be our chart lesson for today. And after a slow day like yesterday with hardly no trades, really before the first hour was up trading today, we had more trades than we had yesterday. So a lot of trades today. The afternoon was a little more difficult because we spent a lot of it in this little congestion here, and you just didn't get a chance to really ride that move down. So you really lost from lunchtime to just after 1 o'clock. So there wasn't but about 30 minutes left. So the afternoon was a little bit quiet, even though we still had some movement. Really, it looked like we were going to end up in a range day here at first, and then we dropped on down for this next leg down. And really, what you had a leg down, and then we went sideways for a while, and then you made that next leg down. It's pretty close to a measured move. I'd say it's within a few ticks there at the most. But I really thought we were going to end up sideways. I know this chart's a little busy, but there's just so many, there's just so much going on. First, all you had was this yellow channel, and then the green, which I never really liked that green channel. It's because it's more sideways stuff. But then it was really when we bounced here, it was fairly obvious we were going sideways, especially once we turned down here again. Then you know we're sideways there, and you can see that roller coaster effect where the EMA's up and down like a roller coaster, and prices are above it, below it, 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 above it, below, above. That's a sure sign of a range, and then suddenly we're working lower again. And in the end, there's just this bigger channel, and you could have drawn this channel before 7 o'clock this morning. If you just drew it off this high and drug it down, but it was really hard to imagine this channel was going to play out. And that's why sometimes you just have to trust the price action. I really didn't trust it. I was just looking at the two early channels working down and then thought we were going sideways. But once we bounced down here a few more times and it fit with this channel, it was pretty obvious. Then, of course, we go back to the top and we turn down right off of it. Then it's very obvious. But that's the key here is you only have your first two swings and you never get this confirmed. And then you're not bouncing off of it on the lows either until the day's almost over. So it's really hard to know if this channel is correct or to trust it. And even if you look at the midline, you can tell it's in play on both sides. But even it's hard to trust because there's overshoots of it and prices push right through. And you can see it comes back into play here and then maybe here. And so I think it's definitely a valid channel, but I don't think it really helped you until it was too late. So if you didn't see that, I don't think it matters because I believe you had to play these other patterns within here anyway. So what I'm going to do is just kind of take that one off and we'll back out here and then we'll look at the trades. Because that's really the way I played it. These two down and then sideways. And even this green down, weak down channel, I believe it's correct. You can see it working, the midline working, the channel, the trend line, the trend channel line, they're all in play. And then we get a break and a few moves to a new leg, and then we correct again. So I believe it's in play, but it's more sideways, and you'd probably been better off to play this sideways channel here. And you would have eventually had to play that one. So just keep that in mind as we go through the trades. I'm going to back way out here where it's easy to see it. But 7 o'clock came right on this swing low here. And you can clearly see the resistance up here. We had a little failed break higher and then 7 o'clock. And then so this is just basically a lower high. And this didn't break higher, so you really couldn't go short right here. You really had to go short right in here. And you got to be a little concerned about the lows here, but this would be the real one I'm concerned about. So what you might do is let this break lower and drop a limit order back a few ticks. Of course, you got a second chance to enter doing the same thing over here, But you might have got a little better entry than waiting on this one. Or just wait on see if you get another entry, and you do get that failed second entry long right there. And you can see prices took on off then. But you could enter here if you wanted. It's just a little, it's a relatively big bar. So, I mean, that's a $225 risk bar if you're wrong. You're basically out $225 if you're wrong. So, versus if you got a chance to enter here on an engulfing bar, you're only out, you cut that in half almost. So that's a lot less risk. And even if you waited till here, you're only looking at $112.50 risk, which is much better than double that. So anyway, both of them are viable trades. You drop on down. You can see this channel is clearly in play. Then we bounce here, and there's a second entry short. Notice the low, first entry, second entry, and there's even a hidden second entry in here. Notice prices move up, they turn down, then the second leg up. And this does confirm the trend line. Normally I'd like to see a close outside the new high. We try that, but we don't quite get it. But I believe with this confirming that with two legs back and the hidden second entry as well, I think that's worth risking. But if you want to, you wait on the lower high to make sure, which comes right there. It works as well. And if you didn't take either one of those, when you get the failed second entry long right here, definitely go short one tick below that. And that's how you enter on a failed. Notice the new high, first entry, second entry, but that's counter trend. So we're not looking for second entry longs, but we'll use them for traps to go short on. And so the failure is when it breaks lower before moving higher, and that's where it breaks lower, one tick below this bar. So you'd enter one tick there, and that was a quick, easy move. Comes back again, but now you're just making short swings down, and you got to be real careful getting close to these lows here. And you get another second entry short right here, but that's your signal bar. It makes a tick higher than that one. This is just an inside bar. It still works, but it's not worth risking. So you make a lower high here. Again, you're right into those lows. Not a very good signal bar either, so just wait. And you don't want to go short down here at the low of the day. And you can see what happens. You would have got burned. It bounces. And you get a second entry short here as well. Again, it's another inside bar, and you see that one fails. Comes back up here. There's technically a failed second entry long here, but this is too sideways. But when this breaks higher again and turns down and gives you that big bearish bar, I like going short there. Because now you got a double. You made this high. You tried to test it once. You tried to test it twice, and you got that trap right there, breaking above those two bar matching highs. And so that's basically a third entry short. But what we're playing is the trap here, and the fact that prices tried to go higher and test that twice and couldn't get through. And we're still looking for a possible another leg down like that one. And there it goes. Then we bounce. There's a higher low here. Not a very good setup. And then the next thing you know, you get a second entry short up here on a failed breakout as well. So I like that one. Normally I'd tell you to wait on a lower high, but since that's a second entry short and we've already had a close outside this trend line and a move to a new high, and the fact that there's your first entry and then there's your second entry. The fact that you got a little inside bar here, it does give you a little bit of concern here, but look how flat that EMA is, and we got the failed breakout, plus we're way away from the EMA on the other side. We're probably going to snap back. So I think that one's worth waiting. If you wait for the lower high, it's too far down. Now you got congestion, a little trading range here. Don't enter in that. Even though prices broke lower, you just can't enter into that because there's a good chance it fails out this side too and goes back higher. So we run on down, we bounce, and you get a reversal here. The only problem with this trade right here is it's in the middle of this trading range. And there's still a real downward bias, and there's no real strong reason to say, hey, this thing's reversing yet. So I don't think I would take that failed second entry short. Me and another trader already talked about this trade. Um, it is a failure, so your entry would be one tick above that. And I believe you'd still scalp out of that. I'm not sure. Um, Let me just check it and see. I'm curious now if you would scalp out of it. Entry would be 1350. And no, you wouldn't have scalped out. You would have had to ride this out. It still would have worked, but you would have had to ride out the pullback, and that would have been really hard to do because it looks like it's going to be a failure. But the key is when it came back again and failed and then shot up and broke out, that's a great place to go long because it's going to trap some people to the short side. And it's probably going to confuse some people that are trapped both ways. And so you can tell this didn't really do much here. There weren't a lot of people that were, there weren't a lot of traders that really looked at this and said, hey, this is going to be a reversal, because if it had, it would have taken off, and it doesn't. It just breaks higher and fails and comes down and then bounces. And you could almost look at that as congestion too, even though I don't really see a doji type bar. Maybe you could count these two in there, but it really looks like it starts going sideways on this bar. And I think it's just a couple of up down bars in there. I don't really think it's congestion, and it breaks higher. And plus we're coming off the low of the range, so we're probably going to the high. But this is where you got to be careful in the middle too. So that's another strike against either one of those. But I still like this one just because it's probably going to trap some people. And you can tell that it rockets on up and does that. And then of course we got our break, new high. Now we got a lower high right here. Running back down again. And you get another failed second entry long here, but I don't think you want to enter down here. We just came off the lows and we really never got to the highs, but that could mean we're going to trade lower too. So there's some reasons to think about that one, but again, I think you're better off just to wait. And it ends up just making a little trading range here. And then you make that failed break lower and you bounce off the lows. You make a higher low, and then you make the failed second entry short. It breaks lower and turns. Just go long right there. You got plenty of room back to the highs. It is in the middle and of the range, but this still is a fairly big range. And so you got your trend line working with you as well here. So that's another reason I like this one. So if you got a trend that's big enough to trade the trend within a range, by all means trade it. Just once you get right in the middle, you still want to be a little bit, you want to question trades and make sure they look really good, because that's where more of them fail than anywhere. And you can see we didn't go much past the midpoint, and then we're just kind of going sideways before we run higher again. And I don't think you want to enter anywhere else up in here. And really at this point, you still had the green channel working lower. So you can't rule out that we're really still in a downtrend. So there's still a little downward bias to this thing. So that is another reason you need to be a little careful going long here in the middle on both of those. Something to think about. So then we run up to the high side. It's the first break of the green channel. And we finally make a lower high right here. You actually make one here, but it's not a very good setup. But then you break higher and fail and turn down. And so not only do you have there's really a first entry and then a second entry long, and it's also a first entry and then a second entry. There's technically a second entry short in there. It's a little bit congestive, but I just believe that's because there's resistance there and prices are still have a little bit of an upward momentum here, and it hadn't played out yet. But that turns out to be a nice move down. And we're just working sideways, then sideways. And so you really don't get a good chance to go short here. And then we bounce off the lows again. And now your channel's really confirmed, your range is really confirmed on the upside and downside multiple times here. So you get a higher low right here. And this one's a little funny here because you technically ticked back here. So you could almost call this a higher low right there, but you would have got stopped out if you took that. But notice how that bar and that bar are side by side, and they're partly on with this one, so it looks a little congestive too. This is all still part of the pullback, so technically this turns out to be the lower high. But if you'd have traded that all in one bar, you might have entered that one a little early. So it's just a little kind of an odd setup there. But technically this is, you can really see that's all still part of the same move up, and then you pull back. So there's no real correction there until you make this bar and then the continuation of it. So, and then there's the failure, but that's right into the EMA. You're really looking sideways by that point. So I don't like it. No chance to really go short here. High or low here again, but now you're right back in the middle of the range, and it's obvious it's a range now. So I'd be real careful entering any of this stuff. A couple of these probably would have worked, but I'd stay away from them. You just don't really get a chance to trade any of them until you get a failed break lower here. And generally, you always want to wait on a higher low here. But a lot of times, these failed breaks will catch an important low or high. And you can tell we've been ranging there. Really, this started around just before 9 o'clock. And we've been ranging all the way till noon. So you can almost guarantee that's going to snap back. Again, the safe play is to wait on the higher low, which is here, and you get a nice signal bar. But I like these trades. I'll just be honest with you. They're a little more aggressive, and you may not could have gotten in this one because it gaps over and keeps going. It may have backed up and filled on the limit order if you placed it one tick above, but it's hard to say. But I'm going to be honest with you. If you can get in these trades, I like them. Because you might catch, you can tell, even though that's not one of these that just keeps going, it's still an important low because that's a huge move up there. You would have got in around, well, let's just look at it. You would have got in around 35.06, maybe 35.06 and a quarter. And this thing didn't break below another bar until 35.16. So that's a 10-point move. And you only have to catch one or two of those with a runner to have a really good day. And that's where I always try to pick up a runner on these failed break lowers. But you get your higher low with your safer play, and you still get a chance to get 6 or 7, 8 points right there. And then it turns back down, and we just start going sideways. And really what we do, we start that next trend down here. No chance to enter on this move here. Really, it's just, it falls out of that range, and there's no real setup there. I didn't mark this trade, but that was another one to consider. It's a little failed break out of this, but it's an inside bar, but it does have matching lows, and it would have been good for a scalp. So you might have, you might could argue for that one to be green, but the fact that we didn't get back up to the highs here, and we made that big move down, there's a good chance we're going to make another leg down. And it actually starts another trend down here. And then we're working back, and notice you get a leg up, correction, and you move up and you get a second entry short right there with a big bearish bar. I like going short there. And it looks like it's going to fail for a minute, but it doesn't. But your entry is, this is your signal. Let me make that a little bigger. This is your signal bar, and you can see you got a new low, first entry, and then second entry. So one tick lower, and it looks like it's going to fail, but it follows through. There's a lower high here, but too bullish, and makes a nice move down. Comes down here, and you could argue that this was a failed second entry long, but we've already had a break in a new low, so I'd wait on a lower high here or second entry or something. And your lower high just doesn't set up, congestion. You get a failed second entry long here. Again, it's just congestive. You don't want to go short right there on a break below that. It probably would have worked, but it bounces pretty quickly. And actually, you got the break and a couple of legs down here, and then you get a reversal. The reversal is technically here. Notice that new low. You get a first entry, second entry, but that's not a good reversal, and it's right into the resistance here. But when it breaks higher and pulls back and gives you that little breakout pull back short, or long, I'm sorry, that's like that little extra, and that gives people enough incentive to say, hey, we're probably going higher now. And it runs on. That's right at 2 o'clock. I marked it. It's just a minute into the 2 o'clock hour, so you can see 14:01 is when that bar closed. So, and it's probably going to trap some shorts. It's a repeat pattern too. That we had that same play back over here somewhere that we talked about right in here, similar to that. So, but that's what I saw today. After that, it's too late to trade any further. But a lot of trades today, and this is kind of it was relatively easy early on here because it's clearly downhill. If you're just trading the downhill, you're not going to have too much problem. But once it starts going sideways here, this is where it gets, you got to draw these short-term trend lines and stuff. And once it's clear we're going sideways, be careful right in the middle here. I mean, I marked a couple over here in the middle, but we still had the green channel working down there. But by the time we got out here, it's pretty obvious that we're just going sideways. So I'd be much more picky about the middle, entering in the middle after that point. So anyway, we're over 20 minutes here, so I'm not going to beat around the bush. I'm going to wrap it up. I hope you had a good trading day. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.